You are in your 20s or have just started your career. You got a real job, you are finally making real money, and then your first direct deposit hits and the number feels wrong. You negotiated $20 an hour, you worked 80 hours. That should mean $1,600 hit your bank account, but your bank says $1,247. And nobody ever sat you down and explained where the other $353 went. It is not a mistake. It is not your employer shorting you. It is a system that has been running your entire life. You just never had to deal with it until now. By the end of this video, you will know exactly what every line on your pay stub means and where every dollar goes. So let's hop into it. There are two terms on every paycheck you will ever receive, and you need to understand them. They are gross pay and net pay. Gross pay is what you earned before anything is removed, hours times rate, or your full salary. Net pay is what actually hits your bank account after every deduction, also called take-home pay. Gross pay should be at the top of your pay stub. Net is at the bottom. Everything in between is what we are covering right now. So let's get into the first chunk that gets removed. The largest deduction on most paychecks is the federal income tax. This money goes directly to the IRS and funds the federal government. This would include defense, infrastructure, and several federal programs. How much is withheld depends on your income and your W-4. The W-4 is the tax form you fill out on day one of a new job. For most people in their 20s, you will fill out single with no dependents. Luckily, this puts you in the simplest tax category. The US uses a progressive tax system. Your income is divided into brackets, each taxed at a different rate. 10% at the bottom, up to 37% at the top. Most young adults in entry-level or mid-range jobs tend to land in the 10 to 12% bracket on most of their earnings. And because standard deduction for a single filer in 2026 is $15,000, your first $15,000 of income is not taxed at all. It is important to note that the withholdings on each paycheck is an estimate. At the end of the year, you file a tax return and settle up. Too much withheld, you get a refund. Not enough, you owe the difference. That is what tax season is all about. Moving along, FICA stands for Federal Insurance Contribution Act. It covers two programs, Social Security and Medicare. And unlike federal income tax, these are flat rates that apply to every working American from $1 with no exceptions. Social Security will take 6.2% of your wages. Your employer matches it with another 6.2%, but only your half shows up on your check. In 2026, this applies up to $184,500 in annual earnings. Above that cap, Social Security stops for the year. Medicare will take 1.45% of your wages. Your employer will match this as well. Medicare has no cap. It applies to every dollar you earn throughout the year. When you combine the two, 6.2% plus 1.45%, your FICA contribution is 7.65% of every paycheck. On that $1,600 gross check, that is $122.40 gone before anything else. To give a brief overview of the programs these deductions fund, Social Security pays monthly income to retired workers, disabled individuals, and surviving family members. What comes out of your check today funds current recipients. When you retire, your own benefits are based on your work history. Medicare is federal health insurance for Americans 65 and older. Your 1.5% helps fund it. And Medicaid covers low-income individuals and families. This, however, is a separate program with separate funding and does not appear on your paycheck. If you would like a deep dive video into any of these programs, let me know down in the comments. Also, if you're enjoying the content, please consider subscribing. I make financial education videos ranging from simple to practical. Now, after federal taxes comes state income tax, if your state has one. 9 states charge no state income tax on wages. Those are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. If you live there, this line does not exist on your paycheck. Everyone else, 41 states plus DC, pays an additional state withholding on top of federal. Some states use a flat rate, some use progressive brackets. California sits at 13.3% at the top. Some states are as low as 2 to 3%. The amount depends on where you live and what you earn. I have used the state of Georgia in my example. Some people see one more line they may not have expected: local income tax. If you live or work in certain cities, your municipality charges its own tax on top of everything else. New York City adds 3 to 3.9%. Philadelphia charges 3.75%. Most Ohio cities add 1 to 2.5%. If your area has it, your employer withholds it automatically. Lastly, there are 2 more deductions you might see depending on your employer. We will start with health insurance premiums. If you are enrolled in your employer's plan, your share comes out pre-tax each check. Then there's 401k contributions. If you are saving for retirement through work, those dollars go directly into your retirement account, also pre-tax. If you see any line you do not recognize, ask your HR or payroll department. You have every right to understand your own paycheck. Now that we have gone over deductions, let's take a look at an example pay stub. Every employer formats these slightly differently, but the same information is always there. At the top, you will have employer name, your name, pay period dates, and pay date. Earnings. This will show your gross pay broken down by hours or salary type. Then deductions. This shows every item listed individually. That's federal income tax, Social Security, Medicare, state tax, local tax, city tax if you have it. And you have health insurance and 401k. Once that is deducted, you have net pay, the bottom line, your take-home pay, what hits your bank account. Lastly, you have year to date. It is a running total since January 1st. This is useful at tax time. Read this every time you get paid. Most people in their 20s never look at it and then wonder where their money went. You are not going to be one of those people. Now you know why money is leaving your paychecks. Every line on the pay stub has a name, a purpose, and a destination. None of this is happening to you. You are part of a system, and understanding it is the first step to making it work in your favor instead of just feeling confused every 2 weeks. Remember, there are only 2 certainties in life: death and taxes. If you found this information useful, please hit that like button. Subscribe for more financial education videos, and drop a comment with the deduction that surprised you the most. Thanks for watching, and I'll catch you in the next one.